So the old pension system, and I've explained that's unsustainable, unfunded liabilities, other unfunded liabilities. You're gonna like this one. The money you have in your bank account. That, my friends, is another unfunded liability. Now you may say, well, that's impossible because I know I physically put the money in the bank. So it has to be there. If I physically take this underwater dive light, it's a diver's flashlight, and I put it down right here, it left my own hand and I set it down, I know it's there. But it's not really there. It's been lent out 1,500 ways from Sunday. So that kind of presents a problem, especially when the economy starts collapsing, which is what's been happening over the last several years. And when it collapses, more people get in more debt because you have to use credit and credit cards to just basically pay the bills. Therefore, those people who are getting the loans, who are ultimately getting your money that you put in the your bank account, because that's where money comes from to give out loans, of course multiplied many times, but they can't pay it back. So it kind of starts a little chain reaction. So you say, well, that's fine because we have the FDIC insurance. Every bank I've ever seen has a little sign on the little placard that says insured by FDIC insurance. Member FDIC. So let's take a look at the FDIC insurance. They have what is called a DIF fund. In other words, when a bank goes kaput, they tap the DIF fund, shotgun marry the bank off to another bank, usually a larger bank. They'll come to an agreement with the FDIC where they say we're going to get all their customer accounts and, of course, all the money that they had in their accounts in exchange for some taking on a little bit of a loss and splitting that loss with you, the FDIC, or through the DIF fund. Now, here's the problem. There are approximately $5.25 trillion that are ultimately, allegedly insured by the FDIC. The DIF fund currently has around $38 billion in it. $38 billion for the rainy day when a bank fails. $5.25 trillion that it allegedly insures. I know you can walk to your bank, you can go ask them to give you, you can write a check, you can go get some cash out, you can do a lot, and they'll give it to you. And I remember it took me a few days, years ago, to pull out several thousands of dollars. Years ago. I wonder what that's like nowadays. How quick someone can get some money out. Any sizable portion anyway. I'm not talking about $500 or $600. But at the same time, this is the same thing with gold and silver. If when you tell someone to buy gold and silver, we're telling them buy the physical asset, silver, coins, bars, whatever, and store them at home in a safe bolted to the ground. It's the same thing with your bank. I mean, think about that. If it's not in your hand, you don't own it. And I'll give you the perfect example. Argentina. We had 9/11 in 2001. They had the economic collapse of their lives in 2001, which there was no news of because we were focused on 9/11, of course. And their dollar, the Argentine peso, was 1-to-1 with our US dollar at the time. 1-to-1. 1 US dollar equals 1 peso, Argentine peso. Overnight, literally, overnight, the people woke up, the currency was devalued 3-to-1. It now took 3 American dollars for 1 of their pesos. But some of them said, aha, we knew this day would come. Sí, señor, sí, we knew it. And that's why we had a separate bank account inside of Argentina that we only put American dollars in. We didn't convert them to pesos. Whew. And before they could wipe the sweat off their brow, breaking news, Argentina news, the government has confiscated your US dollars and gave you Argentine pesos in exchange automatically. No asking you, it just took place. Again, whew, at least I'll get 3 times the pesos back in exchange, which is okay. So they go into the bank. I'd like to take a little look at my deposit slip. I had 5,000 American dollars yesterday. The government forcefully told me today that they're now pesos, so I'm expecting to see 15,000 pesos in my bank account. No, sir. You have 5,000 pesos in your bank account. The government took the US dollars and left you 1-to-1 ratio of pesos, even though the ratio is now 3-to-1. Sorry about your luck. Have a nice day. Here's some pots and pans. Go bang them together as you walk down the street and hope that a Barack Obama hope and change comes. And they did get the same kind of hope and change he offered here. None. Worse than it was before. So they didn't get their money. They lost it. So here's what I'm telling you. I only keep enough money in my bank account to pay 1 to 2 months of bills. And you should do the same. Some of you may say, well, I've got, $100,000, whatever you may have, IRA, I'm ready to cash it out. I've got it. I don't feel comfortable leaving it at home, because if I get robbed, there's no insurance that's going to, pay me back my $100,000 cash that I had in the safe. It's got to be in the bank. Well, again, if you have a true burglar-proof safe, keyword, burglar-proof, not fireproof, not something that you've spent $80 or $100 over at Home Depot or Walmart. That's not a safe. It may say the word safe on it. It is not a safe. It must be burglar rated, burglar proof rated. And you must bolt that son of a gun to the ground via concrete, your concrete floor, with big concrete lags inside the safe. And then you will have yourself a safe. However, OJ Step 4 don't have that kind of money floating around, so I don't have that problem. But I could see where some of you might have that problem and say, well, where am I going to keep the money? Well, I would turn it into silver and keep the silver in your safe. And if you got so much money, you don't even know. You got so much money, you need another brother just to count it for you. Then maybe you should buy some gold too, because you're going to get a lot less gold for your money, obviously. As far as weight goes. If you have 1 ounce of gold for $1,400 or 1 ounce of silver for, $23, well, obviously buying some gold would eat up your money. You're still going to be real happy when the price goes where it's going to go. But the point of this video right now is that even with FDIC insurance, it is not, your money is still not safe in the bank. It's only designed the same way other insurance companies are designed. Oh, I had a flood. Okay, out of the whole United States of America, Farmers Insurance had to pay 16 houses to get pay for 16 houses to get rebuilt because they had major flood damage, and they all had insurance. But Farmers Insurance Company, in this example, I'm making this up, has nationwide people paying in insurance, for using them for insurance. So they're making ungodly amounts of money every year for insurance, not wanting to pay out on the claims unless they have to. And every time you need insurance, you find out that you didn't have that kind of coverage. That's not included. That doesn't count. But I'm giving you the best example, saying they did have the insurance. So is it going to hurt Farmers Insurance or State Farm or Nationwide is on your side? Unless you're calling for a claim. Then we're not on your side. 16 houses to get rebuilt. It's like pulling a few dollars out of your pocket for them. Oh, no problem. But what happens when 40,000 houses need insurance all around the same time? that will bankrupt this insurance company. Now keep in mind, I use an example of 40,000 houses. How many houses do you think there are in the entire United States of America? Millions upon millions upon millions upon millions upon millions. But even 40,000 houses in this example would destroy any of these any of these insurance companies, any of them. If they had to immediately replace 40,000 average whatever American homes all at once. Couldn't sustain that kind of abuse on their DIF fund, if you will. They don't have a DIF fund, but again, they have funds. It is insurance that pays for the little problem here, no problem. A couple years later, little problem there, paid that one. They're never were designed to say, oh crap, everything just failed, or not everything, but a huge amount of things just failed. Just like I said the other day, AIG Insurance. They were part of the bailout in 2008 because they had to insure the big banks. And as we know, the big banks get their money. So the AIG company should have went under, paid out very little insurance that it had to whatever bank was there first, who needed it. Have a nice day. The rest of you go pound sand. We don't have it. We're bankrupt. That's how that normally goes. But again, the bankers said, well, this is us that needs the money, not the average schmuck American citizen. So AIG was included in the bailout so that they could get the banks the funds. Even while simultaneously shareholders of AIG got destroyed, which there's a lawsuit. I talked about this the other day in that respect. So if there's $39 billion in the DIF fund and there's $5.25 trillion that needs to be insured, it sure as heck ain't going to take a lot of failures to deplete that fund. Now, stand aside for a second. Jay Snip, stand down. What's that? Oh, the DIF fund, the FDIC insurance, they have a window to the United States Treasury that in a dire situation, they're granted $500 billion in extra funding. So $500 billion, worst case scenario, plus $38 billion, that's already in the DIF fund. Let's just call that $550 billion. Again, to backstop $5.25 trillion. A far cry from the amount needed. So keep that in mind as you see what's happening in the EU, Poland, Greece, bail-ins, deposits stolen, pensions stolen. Keep all that in mind. I think that's all I wanted to discuss. Although, it's time for a little haircut. As you can see, look at this. I got gray hairs coming in. I got so much gray hair, it's like my system thinks it's like green. Part of the green screen, it's like keying out my hair. Look at this. It's like trying to draw the Realist News back screen on my hair. Look at this. Look at these two suckers. We're gonna do this live. We're gonna O'Reilly this one. Look at these. Look at this. I mean, those things stand out like a sore thumb. Anyways, take care.